let's get this party started. Good morning, everybody. Alright, how's everybody doing? Alright, let's get started with this. Let me turn this music down a bit. How's everybody doing? Good morning, good morning. Not a lot going on out there, price action today, but we'll just give it a quick update. I do have an exciting update on for Elrond for you guys. I got some confirmation back finally from some of the core team. It's actually from stake pool operators that validated this for me, but I got some answers back on some things. Yeah, somebody included me on a tweet that Ted replied to a tweet for me. I think, well, I didn't meant to do that or not, but oh no, he was adding somebody else to it. Got some thoughts here from Ted I wanted to share. Balance on exchange keeps the drawdown continues to be extreme. We'll talk about that. Some models, some work I've done there. But before I get started, anything that you hear here as usual, I'm not a licensed financial advisor. So anything you hear, please take it as just my observations. And if you were to take trades blindly based on anything that I talk about here, then you're going to end up losing all your money and living in a van by the river with Doge and Boneholder here. Matic is going crazy. Let's go take a quick look. Yeah, Matic's been awesome. I've got my hodl bag still on Matic here. What I was waiting for, we have this breakout retest resumption on this kind of this consolidation here. I was waiting for this weekly support to put a trade on. Because I already have trades on, and you have too many correlated trades going on. I've got trades on Bitcoin on right now since we hit this support level. So on these two tests, I added a little bit here, and I added a little bit more on this second test here. So those are my last two entries. And I may have added on a breakout of a downtrend. I'm not 100% sure. But I'm about, I've got a pretty decent sized position on, leverage position, trade on Bitcoin right now. Not full size just yet. Got an add or two to make. And then I've got trades on Litecoin. But I haven't put a trade on Matic yet because to me it's a proxy for Ethereum. Let me just go take a quick look at this. ETH BTC. And Ethereum's looking good, but what I still expect, I'm waiting for it to come into one of these two support lines, and the reason I say that is I expect the Bitcoin dominance chart to bounce on this weekly support right here. So what you had was, we had this kind of bottoming pattern, Bitcoin dominance shot up, hit this trend line here, and it's come back into these supports over here. So I'm kind of expecting a little bit of a bounce and maybe resumption by Bitcoin dominance at some point. If we're going to get the bigger moves that many anticipate through the end of the year, if we get the typical October through December FOMO, seasonal FOMO that I think a lot of people are predicting, then this should obviously blast upward, and that would take Ethereum with it and thus Matic with it as well. But Matic is looking good here as a short-term breakout. I'll be waiting for it to come back in for me, that's what I'm doing. Now let's talk about the Bitcoin cycle and the model and where we're at and all that jazz. I think it's, let me move this off my screen. I think it's important to keep a track of a few things. I've tweeted yesterday a couple of things here, a couple of thoughts. So first of all, I figured late this week, Thursday, Friday, literally Thursday and Friday would be as good a day as any to do a monster, breakout of the all-time high. So this is a fractal that I took from last December actually through the April high. Or was it April, May? May high maybe. I think it was April high. And I always get confused as to which month we actually put our top in. I can never remember. Hey, my TV's not on. Oh well. So let me take a look at comments here. Hey everybody. Mod me, says Tanner. Okay. There you go. So what I was looking at here is this is a fractal from last December. This is that whole Wyckoff distribution pattern, basically, is what this was. And you could call this last little bit like a 3 drives pattern. So the February, March, and April peaks were kind of a 3 drive pattern. But, you know, in studying this in kind of revision, this is a very traditional Wyckoff distribution pattern, apparently. Again, I'm not a Wyckoff expert. But what I did is I took that fractal from when it broke the prior all-time high. So this was the last 2 days of consolidation below 19,000. And when we finally broke out of that, if y'all remember, I'll take these off. Last year, it had a huge breakout, and then it consolidated up well above. It never came back. And I think we were waiting for, this whole time we were waiting for a retest of 14,000, and it never did. And then we were waiting for a retest of 19,000, and it never did. It just took off, right? So if we were to get some sort of price action like that, so this was, I posted this yesterday thinking that we have a couple days of consolidation here. And then maybe this Thursday, Friday, if there's some bullish news from some company adding Bitcoin to their balance sheet or whatever as earnings come out, then we might get this big blast off. But whatever this blast off occurs, if we were to get a break of the all-time high and it just ran, we can start to watch this distribution fractal. Say, okay, you know, the new Wyckoff overlords, who apparently there's clearly somebody that has the ability to manipulate the market, because they were able to make this exact Wyckoff pattern on the upside and then another exact Wyckoff pattern on the downside. So I want to keep track of that anyway. Not that I will be trading it, because I won't be trading specifically any sort of fractal and or Wyckoff pattern. I'll still stick with our standard traditional TA. But if it were to blast off, this would be something to watch, some key potential dates. So if it were to blast off, say Thursday and Friday, looking at potentially a very strong run through late November. Now, I don't know if the percentages will line up exactly, but this is measured to the percentage gain that we had from that all-time high break in December through the April peak. And they gave me a top of 220,000 on, I think, February 25th, basically. So earlier than last year, because obviously the breakout would happen if it happens in October, or if this happened maybe early in November, the peak would still be quite a bit earlier, because it's obviously clearly a month and a half potentially before December. So we'll see about that, but this is what I'm keeping an eye on. If we were to get another rolling top, then we might have some strong price action through November, a big sell-off, a big pop very to the end of the year, and then a rollover early next year, so forth and so on. I don't know this is going to play out exactly like this, just because there's so many people expecting a parabolic top in December. What I would guess would be actually happen is this might get compressed to where there's a top, but a very kind of a weaker top, less than people think, maybe 180,000, and then it starts to roll over. So this consolidation here we saw in January actually happens, peak in December and consolidation, and then a blast off in January. The market likes to inflict max pain. So that's what happens. The market wants to always catch as many people on the wrong side of the market as possible. Now here's the other chart that we have. This is from that July low. So in 2017, and I believe in 2013, both of those cycles put in a low in July. And so we did also here, a low in July. So the seasonality of Bitcoin is kind of playing out. But then we had a strong rebound from that low. And so this is the fractal from 2017. Again, measured, it was 154 days from the July low to the peak in 2017. And it was a 952% gain. So here's what the fractal looks like if we follow roughly this sort of price appreciation into consolidation with a few pullbacks, steep pullbacks, and then a blow off top, right? And that would give us a price of 311,000 by like the 20th of December, roughly. So if we were to get this sort of price action, this is more or less a trajectory we should follow. And all in all, we're following that pretty well. We got the strong bounce out of July into August. We had a weak September, just like we did in 2017. This weak September came a little bit earlier this time, and it lasted about the same length. So something I'm noticing is that the weakness was longer this time, right? But then, we had a really strong October so far. And at the end of, I guess it was, this was early November last time on this 2017, I believe. It was the low was actually a few days earlier in July, and then the price started bouncing more mid-July, whereas it was a couple days apart. It really wasn't that far apart. But as of right now, we're 20% roughly behind, 25% behind where we should be if we're following this more or less exactly. Now, of course, we're not going to follow it ever exactly, but this is lining up pretty well for it to rhyme. So if we were to get a blow off top, this is another kind of trajectory to look at and potentially kind of follow what the price is doing here. Okay. How's my mic? What's up? Alvin Kamara is overrated. My brother's a little salty. So we played in fantasy football last night, and I was down I think 40 or 50 points, and he had the New Orleans defense, and I had Alvin Kamara. So his New Orleans defense just needed to stave off Alvin Kamara, but I also had one of the New Orleans linebackers, Demario Davis, I think is his name, and we have IDP in our league. So yeah, my defensive player put up 30-something points, which is a pretty big game for a defensive player, and Alvin Kamara went ballistic. He only had one touchdown, I think, but he still put up 50 points almost in our league format, and I ended up winning the game. So sorry, Tanner. Mic is so cheap. Is the mic terrible? This is actually not a cheap mic. Maybe it's not it wasn't $1,000, but it was a couple $100. So I don't know if maybe I just had bad acoustics in my room. But now it's not a cheap mic, or maybe I'm using it wrong too. I don't know. All right, balance on exchanges. So this is something that is a very simple indicator, something that I check pretty much every day. This is a quick check of what's happening with the market. And so basically, if you have convicted buyers, what happens is when you buy Bitcoin with conviction, you buy it and then you self-custody it. It means you pull it off of the exchange, you put it in your own wallet, right? And so that act of self-custody is kind of just an indicator of a strong buyer. And so when we see coins coming off of exchange, and this is two parts. One part is this is partly education. People understand how to self-custody now, and now there's decentralized exchanges available. So in theory, we should see a drawdown, even in a sideways market, of coins off of centralized exchanges that custody your coins onto self-custody over time, as people get more familiar and comfortable with that. So that's part of what's going on here. But typically on a short time frame, it works out pretty well that when you see coins coming off of exchange, price appreciation is shortly to follow. And when you see coins coming onto exchange, let me go share another chart here with you, a live chart. When you see coins coming onto exchange, then a lot of times we'll see price start to decline on the other side. So let me try to highlight this. Let me pull this full chart up here for you. Okay. So as price made its very strong ascent here in 2017, obviously coins came onto exchange quite a bit. Let's just go to more recent history. So they were coming onto exchange as price was rising, but you see the trend upward. So when price starts right here, you see the coin started accumulating, price tanks. This is people putting coins on the exchange for the purpose of selling. Now, obviously through 2020, we saw this big spike. This is a liquidity spike. A few people sold, had to sell their Bitcoin. So this is coins coming onto exchange for the purpose of liquidating because of the dollar kind of crisis, the liquidity crisis we had there. All right. But you see the overall trend here. As coins come off of exchange, price was appreciating. So people were buying pretty strongly. Now, get that out of my way. Fast forward a little bit to 2020 specifically, and you're going to see something that happened. Right here, we started to have an increase of coins coming onto exchange as price was also increasing. This is a really good indicator. You see this right here. So the coins on exchange bought on April 19th. The price was declining on April 19th, and it declined all the way through. Price hit a bottom here on April 25th. right? So coins were coming onto exchange as price was declining, not too, antitypical. But what happened here is as price climbed, we had coins come back onto exchange, and then we had a very large influx of coins onto exchange, which correlated, very strongly with the price coming down. People were putting coins on exchange and then pretty much immediately selling. And then we had our big price increase. Then we had this huge nuke of coins off of exchange. But now we have the situation, we've had this very large drawdown of coins on exchange right here when price was going down. And then we continue to have coins. There's a big price increase, and instead of coins coming onto exchange like typically happens when the price increases, it looked like this. So over here you see there's a decline as price increased, a slow decline. This is looking the same, right? So same behavior from this roughly the same time frame. So this was October of last year. Late October of last year, we had a big drawdown of coins off of exchange, and then a big price appreciation as it continued to slowly draw down into the peak over here. Now this can maybe help us determine where there's a peak when we see this this reversal of prices. Price was going up while coins are coming down, and then there's a quick flip in the market, coins coming on exchange, and then that's when the big tank happened. So we're in that reverse scenario though. Coins are coming off of exchange and price is going up, roughly is what's happening. All right. So that's what's going on. And this is one of the quickest indicators, that I'd take a look at. Now the other thing I watch pretty closely is perpetuals funding rate, the derivatives market, and you can see here that the derivatives got way overheated a couple days ago. They were all the way up at it was a 0.045%. That's a sure sign that we're about to have a huge sell-off to clear out long leverage. Now, our funding rate still maybe higher than I'd like to see it below 0.001 or 0.01, but it's at 0.015, so it's not in danger zone at this very moment in time. So that's what we've been watching. Now, on the topic of cycle models, Ted posted this, after I posted this particular chart. So let me just show you what I posted that Ted then quote retweeted. This was basically, this is before I put the rest of the chart that I just showed you here. Before I put this full thing up, all I did is I first went and measured. I said, okay, from the all-time high break when it broke for good right here, I guess it was late December, to the peak in, is it April, right? Yeah, April. It was 119 days and 227% increase in price, all right? So the exact same measurement. So I said, okay, if it were to break out, say, tomorrow or imminently, late October, basically, 119 days out was basically very late February, and a 226 appreciation of $220,000. If we get another similar, obviously it's never going to be the exact date and the exact price. The market's never that. It's not typically going to give us that much confluence. It'll rhyme, but it won't repeat exactly. If we get another Wyckoff distribution event, this is the type of price action and peak we could be looking at. And then Ted says, okay, good thesis, and it fits the 3 HODL waves thesis. So, in every bull market, you can see here on this, it's called the HODL waves. And so this is as coins move from strong hands to weaker hands back to strong hands, basically. You get this overheated situation where you have people who are holding for very short term. And as these spikes happen, we've had 3 distinct spikes in every bull market. So in the very beginning of Bitcoin's history, after Mt. Gox went live, you had 3 spikes in short-term holders, and then the price would peak right as there was a big increase in short-term holders. And then it would go back. These lows are the red. When the red evaporates, that's short-term holders disappearing, and that's all long-term holders. And so as you can see here, the long-term holders accumulate when price is low, and then you have a few short-term holders that come in at the very price peaks, and then once price starts to turn over, the short-term holders evaporate. But there were 3 distinct waves in 2013. There were 3 waves, not as distinct, but pretty, fairly distinct spikes here in 2017. But 2021, 2020 has been very distinctly different. We had one very distinct kind of wave as for this whole rolling top that we had last year. We really haven't had a second distinct wave. And so there's been a lot of people, including myself, that have wondered if these little spikes that we saw in here was kind of like a bigger wave 1 and a smaller wave 2 type of thing. But it looks like we might have 2 more waves to go. Going back to 2013, you see how spread out these were. Now we're a little bit more spread out this time, but we may only have a double wave, right? Could only be 2 waves. That second wave might be happening right now. But if we had, there was a mid-cycle peak in 2019 that some theorize that could be the first wave. What we saw here was the second wave, and we're headed for a third wave. But nonetheless, if we're still in the situation where that 2019, because that happened before the halving. So in my opinion, this is not valid because we're looking for these peaks to happen after the halving. And I consider, just as a small side note, and a lot of people say that we've only had 2 halvings, and they're absolutely correct. Or this is the third one now. Before the cycle, we only had two full cycles, I should say, from halving to low, bear market low. If we go back to my BLX chart, my long-term chart, what you'll see that I do is I put on here the Mt. Gox state. So the market is ultimately just supply and demand, right? So a supply side disruption or a demand side disruption can cause wild price fluctuation. So what we had here is Bitcoin trading, and then I did the best that I could to kind of roughly map out how Bitcoin was trading leading up to the Mt. Gox. But Mt. Gox went live. There was a lot of anticipation for that. The price had made a little bit of a high, and then it consolidated after Mt. Gox went live. And then it got very volatile, and then you see that it shot up. I contend that in 2010, when Mt. Gox went live, that was a demand side change. Now the blocks were still coming in at 50 Bitcoin per block at this point, but because people could more easily buy Bitcoin than meeting somebody in a parking lot with a bag full of cash or something, or mining it, people could actually buy Bitcoin on an exchange. That drove the demand a lot higher. So this to me was pseudo like a halving, but as a demand side change, not a supply side change. But we see that obviously the parabolic price action here, and then we see a low. You see the metronome effect. From the time Bitcoin was created and was really first, Bitcoin, technically trades by itself. It doesn't need an external exchange for you to be able to change from fiat currency into Bitcoin. Bitcoin can trade by itself, right? People can buy pizza with it. That's a trade, or whatever, So when Bitcoin first went live and people started using it for transfers over here, you can see this metronome effect. Price increased, and then we had a sharp decrease in price. And then price started increasing again heading into the halving after this low. And then after the halving, a very sharp price increase, and then a low. And then price slowly started increasing coming into the halving, and then a very large increase, and a big significant spike down, so forth and so on. This metronome effect has been going on since the inception of Bitcoin. So it's been very cyclical for different reasons. But so I include that supply side shock here. So now going back to Ted's chart, this to me, these waves that you had here, 1, 2, 3 waves, that was right after the 2010 Mt. Gox, right? So these were 3 waves of demand coming in. Now the other thing that I contend with the bull markets is that what happens is the supply shock creates this very first spike. Some people call it the first wave. But once you take out the prior all-time high, as we did, right, these pink lines that kind of go through my chart horizontally, those are the prior all-time highs. Or those are the blue lines. The blue lines are the prior all-time highs, I believe. Anyway, whatever. So this was the 2017 all-time highs, this purple line up here. This blue line is the swing high. So this is the blue lines are the bear market swing high. The pink lines, or the purple lines, whatever color that is, I'm terrible with color, that's the all-time highs, okay? So what I contend happens is that when you take out, the halving causes a supply shock that then pushes price quickly into price discovery into the all-time high. Now, my contention is that what happens after we enter the all-time high is that sometime after that point, the halving is then priced in at some point after here, maybe coming up into this. But then this drives speculation, this drives the demand side. So the supply shock creates the move back into the all-time high, back into price speculation, which then also drives additional demand. That's why we get these very significant spikes. So again, 2010 Mt. Gox was basically just a demand side event, just like basically post halving when we enter we break the prior all-time high. You have this very large demand spike. So, over here we have the halving that then consolidated for a while and gave us this big, large price appreciation, push price into price discovery. And then we've had our price discovery. And now since then, we've had a lot of talk about institutions entering this space and ETF approvals and all kinds of things. So the second half of this, in my opinion, the market is driven by the halving is probably pretty well priced in by now. I think the rest of this is how much demand did price discovery drive into the market, and the demand side is what creates the final peak, in my opinion. So with that said, back to Ted's chart. All right. So the first wave is the supply shock and the price appreciation coming into the all-time high. The second wave, we've seen these three specific waves on the Bitcoin chart. I mean, on the R-Holo chart. Now back to the Bitcoin and my BLX chart here. You can see it a lot more clearly in 2013. I had this big spike, drawdown, a recovery from the drawdown. That was kind of the second wave, and then the second spike. So we had this very similar thing. The first R-Holo wave spike actually happens on the way up. The second R-Holo wave happened this cycle over here, basically after a quick recovery on the way down. So when this bounced right here, this was a second R-Holo wave, and then it cooled off in the third R-Holo wave. So we haven't really had a distinct second wave just yet. Let me see if I can go find the R-Holo waves live here for you guys. Core on chat. No, wrong network. Is it hodler? That's what I'm looking for. Where's my R-Holo waves at? I don't have it here. I don't have it ready. I'm sorry. Let's use Ted's chart. So this now, of course, the other thing is we don't have to have three waves. You could have two waves, right? It could be two waves. It doesn't have to be three waves. We'll see. So likely we're entering our second wave now. Do we get a prolonged rolling top second wave, or do we get a very pronounced blow off top second wave? That's what everybody's trying to find out. That's what everybody's looking for right now. So we'll see. I put both these charts out there because we just frankly don't know. Is this, now we did break the all-time high, so I would also contend that we're back in this kind of price discovery mode, and now, especially if we break it again, that's going to drive a lot of speculation, and that's going to drive a lot of speculative frenzy. Does that frenzy this time play out in a pronounced spike into the end of the year, or does that frenzy take us into a manipulated Wyckoff distribution pattern over late this year and early next year? Those are the two major things that I'm looking for. We'll see. All right. Theory is for science, not for guessing. A statement or a theory is put forward as a premise to be maintained or proved. What's up, fellas? Thesis. Thoughts on ADA coming up? PAB, Plutus aided backend that will let smart contracts interact directly with wallets. I don't have any thoughts for you off the top of my head. .USD, can you please take a look? Max price of DOT this market. What do you think about BAT and Energy Web token? So BAT is okay. Basic attention token. It's an interesting play on kind of the whole, advertiser space. I think it's tied to the Brave browser, is it not, as well? And then Energy Web token, I've looked into it. It's interesting. I'm not, I wasn't too enthused by it when I looked at it, but yeah, it's tied to BAT, it's tied to Brave. Yeah. Okay, let's take a look at some other charts. Now, I got some interesting updates on Elrond for you guys. So Elrond obviously has been having a release. So this is my current, altcoin, main altcoin that I've been stacking here for alt season 2. We had a break of this versus Bitcoin. We hit this support range we were looking at and bounced strongly off of it. And now we're outside of this consolidation here that we had, and we've broken to the upside of this. I guess you can call this a ascending wedge, a descending wedge or something. It's probably more of a descending wedge because of this going on here. But so Elrond's looking great. Why is Elrond looking great? Well, it was the announcement. The founder of Elrond came out and said, okay, our Maiar exchange is going to go live in November, so late November. The Maiar exchange basically is like Uniswap, but built on Elrond, right? This is how you can think of it. And it'll be a lot lower fee and a lot faster transaction finality than like Uniswap. Okay, So that's what's driving the price action. I did get an update here from one of the core team. So that I did a video a couple months ago about Elrond and some concerns I had, and then I since then I figured out by looking at their open source code for the shard access layer that they open sourced that whole thing. And then basically looking at that code, this is what I kind of came to the conclusion of. But here it is in confirmation about how they assign addresses to shards in their system. It's systematically assigned based on the last 2 bytes of the account. And then something similar happens with smart contracts. So it's the last byte in the address. Now, I was concerned about it, depending on how they did this, that there could be a potential for a malicious actor to overload a shard by engineering a way for too many addresses or too many smart contracts to land on the same shard. What I didn't think about, and it's an elegantly simple solution, is if you just use the last couple of bytes of a wallet address. Wallet addresses are one-way symmetrically hashed. Means that I can't predict what the outcome of the hash is going to be, what the wallet address is going to be from the seed phrase. All right, so if I punch in a seed phrase and I generate a wallet address, the outcome is very random. That's how the Bitcoin network works, right? Is we're looking for the outcome of a hash signature, and the reason that computers all over the world have to work so hard and guess so many trillions and trillions of times before they figure out the right combination is because there's no way of knowing ahead of time which combination of things is going to produce the hash that we're looking for. It's the same thing. A wallet is just a hash of some information, of a seed phrase or whatever. So it's not possible to figure out what the last 2 bytes of a hash is going to be in theory. Now, there's probably ways to maybe manipulate that, but as of right now, I don't see a way for any malicious actor to be able to figure out and create hashes that have the right values as such to overload a wallet address. It would take, or a single shard. They would have to just spam the whole system and create a bunch of accounts across the whole system and try to overload it, which that's been attempted before by a bunch of different projects, and it's been defeated. So that I'm no longer concerned about the core, how this works, because it's a very simple solution and it's not really vulnerable to malicious attack. So that when I figured that out, looking at the open source code that they for the shard access layer, that gave me the green light go on Elrond, right? So I was like, all right, I think Elrond is actually pretty provably secure. There's a lot of good things with it, and it's way undervalued. So that's what gave me the green light to go on it. And obviously, it was working on a prior all-time high here. 302.53, 54 is the prior all-time high. We got really close, and now we're curling down here to consolidate some more before we break through. But that looks really, really good. So for me, Elrond's green light go. I don't have any concerns about the tech. So that's that. So how I was really big on Cardano this about this point last year, and Elrond's what I'm thinking is going to have the biggest run now coming up this year that I can see. Matic, I think technically of all the ones we were talking about last year, Matic had the biggest run, but we weren't as convicted, didn't buy as much of it. So there's probably some other project that's going to run bigger than Elrond too. Maybe even a major project could be Solana or Avalanche or something. But Elrond is way undervalued. If we go to CoinMarketCap, let's take a look real fast where we're at with Elrond. Solana's way up here at 6 with a $62 billion market cap. I don't see it outpacing the gains. I can still see it being ahead of Elrond coming out of this market cycle, although it shouldn't be. But I don't see it outpacing the gains at $62 billion market cap already. And then you've got Avalanche over here at $15 billion. It's got a lot of room to run. Avalanche, I could see overtaking Solana, honestly. Or it should. Avalanche is, I would say, better than Solana, superior to Solana. And then Elrond's way down here at $5.5 billion market cap. And on the list of layer ones, this is probably the best single layer one blockchain in existence right now, right? So again, Avalanche isn't a blockchain. Avalanche is actually a kind of a collection of things, but it's at the end of the day, it's a directed acyclic graph that's used to do finality and a consensus for blockchains, right? So it's kind of like an extra layer. So but it's rooted in the DAG, directed acyclic graph. Same thing as like Hedera hash graph. right here is also a DAG. There's several DAG protocols that are on this list. I am not as comfortable at this stage with DAG protocols. I think this is going to be a great play for next cycle when we have DAGs more or less figured out. But this could be the early part, being really, really early to the name like Avalanche. It could definitely be a huge name. But I think Elrond, again, at 1/3. I guess it's only 1/3 the market cap of Avalanche. I thought it was further back than that. But this one seems to be like the best value on the list here of the majors. Number 38, it easily deserves to be number 10. I would say for a certainty, Elrond is superior to Solana. So, you know, this one's getting all the hype because it's got a lot of VC capital, FTX behind it. There's a lot of big money buying it. But in the long run, I don't see it winning out over, just like I don't see Binance being ahead of Cardano, you know, for forever. It's been for the most of this cycle, but it really shouldn't be, I don't think. But we'll see. We'll see what happens. BAT, you asked about BAT. Where is BAT on the list? Basic attention token. I mean, yeah, it's pretty good. I like the, so it's kind of a play on, I don't know how to say it. Well, what space is Google? Advertising space? Making crypto and DeFi accessible and usable for everyone. So, and it's tied to the Brave browser. That's a pretty cool, I mean, it's been running pretty good here, hasn't it? Let's see what it's up in the past. What's that? Charts. Let's see. Let's go to a 1-year chart here. Oh, yeah. So you had a nice little pop up to 154, and it's been consolidating. It looks like it might be wanting to break out here. So that looks, I bet if I go do an actual chart on BAT USD, it looks like the chart's looking pretty good here. Let's just keep it on the 12-hour. Basically, so we had this, you know, you're putting in a potential bottoming pattern. You had kind of a double bottom here, a little bit of a W, but we missed that one. Yeah, so breaking this long-term downtrend line would be very bullish. If I go zoom in a little more on the daily here, here's your resistance at 76 cents. Let's draw these as white. My daily levels, whenever you see a white horizontal line that started at a candle like this, that's a daily resistance. Daily resistance there, and daily support here. So, just a quick look at this. You know, a breakout over here, hit that resistance, come back to this support would be the best of all scenarios. I would be buying into support there and then adding on a breakout to the upside. You can also, in crypto, you know, I kind of scale into positions. I treat crypto as a hybrid position, and I have definite swing trades, but I have more position trades. So what I do is I use these, use the technical analysis to help me determine when to start building my position and at what levels to build my position. So, for example, here, I'm not going to buy BAT. Like if I wanted to build a position in it, I wouldn't buy BAT when it's inside of this, right? Because I prefer up only in price, right? I want to be moving capital to things when things are going up, especially if I'm using leverage. I definitely want to make sure that it's going to be trending and it's trending upward, right? When it's consolidating like this, I don't have any real reason to buy it because my capital is just tied up for something that's going sideways and could potentially go down. This doesn't mean this is going to break out. I'm talking about a potential scenario if it does break out. It could break down. It can go down for sure, right? It can hit that resistance, that trend line, and just keep bouncing down off of it. But should we get a breakout of this to the upside, so you can play a little bit, you can add a position on the breakout, add a position on the retest of that support, or if it comes back into that trend line, and then buy on the breakout on the upside over here to kind of finish building your position, and then let that position ride. You know, take profit targets. If you're looking for a quick kind of a scalp play, you know, you might only get into here before you get some turbulence, I'd call it. But that may give you another entry actually. And then up here, my take profit would be around $1, my initial take profit. I would probably take some off the table, move stop losses into profit, and try to let it ride out for 142 if I was going to trade BAT, which now that I've looked at it, I might. Got it to my list. It looks pretty good. There's a lot of, here's the other problem too, is that there's a lot of, and it's not a poop coin, there's a lot of projects that look like this, so it's kind of hard to say. But yeah, so that's good. BAT's good. Subliminal messaging for the screen advantage of the river. I'm getting some LBC from alternative media platform. I haven't looked at much. Pretty weak, I think. Oh, LBC, is that a coin? Position on the breakout, really? Yeah, you can. Does Lightning kill Bat? No, Bat's not really a competitor to Lightning. So Bat's tied to a browser, and it's used by advertisers to pay for advertising, and I believe, if I recall. So it's used by that whole ecosystem, right? So Brave Wallet, Brave Aggregator, centralized web. So Bat utility for search engines, utilize Bat with e-commerce. So this is a coin tied to an advertising ecosystem. So it's very decoupled from anything like Lightning or anything else like that. So it's pretty safe from, it's not used as a payment method or anything like that. Or I mean, it's not used as a payment channel. It's more used as a utility. So here's my opinion on the whole crypto space in general, right? I think we have people confuse currency, store of value, and utility. So there are coins that can be used as currency for very smaller ecosystems. Like within an ecosystem, there's coins that can be used as a form of currency within that. Maybe a small even geography could be used as. But ultimately, that's where I don't see any. Basically, with Bitcoin and Lightning, I don't see the Lightning network specifically. I don't see like Dash or Zcash or Monero or Litecoin or any of these others working out in the long run, because you can use Bitcoin on the Lightning network for any sort of payments, or direct paying for services even on these type of things. So yeah, it may make it weaker, but when you have a token that's tied to like a platform like a browser, it's a utility. You see, it literally says BAT utility. It's more of a utility token in my book, which means that just like oil, right? If I'm gonna run some heavy industry, I gotta have coal or oil or some type of energy source, and that becomes a utility for me. And I buy that for the utility it gives me, right? For what I can get out of it. And so these utility tokens have value way outside of Bitcoin. So they're pretty insulated from Bitcoin and Lightning taking over. Now, like Doge and Zcash and Dash and all these other ones that people have, like that are flavors of the day or month or year or whatever for different reasons, those I think don't have staying power. Now, Doge probably does because of the whole the generation and the name value, but as an actual medium of exchange, I don't. That's a different story. But this is not a medium of exchange per se. I consider this more of a utility. Yeah. So you've been paid 50 BAT for browsing all year? Okay, so they pay out BAT too, I guess. Right, but Sphinx and LN Pay serve this purpose on BTC rails. Yeah, Gene, I mean, so if it's tied to a product, so here's the thing. This right here is more of this token is more of a security than it is a cryptocurrency, right? Because it's tied to a browser, and it's tied to this whole ecosystem. So you can kind of think of it like almost like owning stock in a browser, because it's going to have value as long as this browser is popular. Just think of it that way, regardless of if there's alternatives in other ecosystems to use Bitcoin to do the same thing. If it's tied to a specific product in an ecosystem that people like, it'll have value. That's my opinion. Now, I don't have BAT. I would only trade it. This is not a hodl for me, right? This is a good example of one that if a chart really has a really good setup and I have access to it on exchanges I happen to be using, and I see a really good setup and I want to take a little trade on it, I would take the trade. But speaking of trades, the other trade I have that I've been watching closely is Litecoin. And Litecoin looks like we had a little bit of a sell-off in Bitcoin here, testing. So Bitcoin's wanting to come back in and test this weekly, it looks like. So I've got this bottom trend line. What I did, let me tell you my warning area. So Bitcoin's going to roll over on us unexpectedly. I've got this top trend line. Just see this price action, so we need to discuss it. This top trend line here rooted at this, these several touches. This top trend line seems to be the most accurate one. And I've cloned it down here, so I got all this price action. So from this low here through this price action over here. And then I've put a lower trend line based on this bottom wick over here. So we've obviously broken down out of this trend line, and we're coming into this. We have a confluence of support. This was the all-time high weekly close. Right here, you see this. So what I did is I'm a little bit off of my price. Let me just go fix that real fast. This is actually slightly lower than I had it. I don't have mine on auto. I hate the magnet tool. All this is really handy to use. All right, 61,535 roughly is the price, right? So this is where we had a large green weekly, and then we had one red weekly candle. When you have this trend reversal, and then you take it out to the upside, and the price starts trading it back above this, it acts as support. It'll act as resistance when you're below it, act as support when you're above it. We've had daily closes above it. One daily close. When did the weekly close? I think this was the weekly close. Where was the weekly red close? One of these dailies had to be the weekly close. It had to be this one right here. So this had to be the weekly close. Was that Sunday, 17th? Look at my calendar. Yeah. Yeah. So this was the weekly close, and then the next weekly open. So then we traded above it. We had several dailies. That doesn't make any sense, but is that right? We had another weekly above this. Let's go back over here. Hold on. Yeah. So we had we haven't had a weekly close yet. We're still working on this weekly candle, which would close. So the 23rd, 24th is where this actually closed and opened. Oh, down here, 23rd, 24th was down here. Yeah. Okay. Now I got it straight. Sorry. All right. So 23rd, 24th. This would also be support down here in theory. 22nd, 23rd. Yeah, this is where it closed and then opened. Closed here, opened here, and then closed over here. All right. So that's going to act as support. To me, now we have all this whole support zone down here. This is where I took my first entries. Again, the April weekly high close from, obviously way back. The March monthly close. I thought this is what the market was going to want to test, honestly. 58.8 was what I was really watching, and it never got a test of that. It might be trying to come back in to test that, which would be useful for the sake of shaking out anybody who, didn't get shaken out already by this all-time high breakout and sell-off, but also anybody who's watching this trend line. So there were a lot of people watching an alternative trend line here. If I draw price action right through here. So this trend line was one that I was watching, and when we broke that, that's where we started to get a little defensive. I actually think our original trend line that we were watching was actually right through here. This was my launch angle trend line right here. And when we lost that, that's where I got out of my trades on Bitcoin at 64.6, I believe. Yeah, 64.6 is where I got out, right? This was the prior all-time high right here, I think. So when we got 64.6 is where we got out. So people were watching that trend line, watching this trend line. Now there are people watching this bottom trend line. If we were to take that out, that would be another kind of warning sign that we're wanting to roll over. But currently we're holding all this, so we'll see what happens on the 4 hour. But I went to go look at Litecoin. Let's look at Litecoin real fast. Litecoin is trying, it's got so much, it's so consolidated here. It's going to pop at some point and make a big move. And the reason it does that, and I'll show you some comparison to 2017 here real fast. But you see, this is like the key level I've been watching. We broke down below it, recovered it, and so now we're holding just barely above it, and we're this trend line right here, we're trying to break this trend line, and if we break this outer trend line here, it's off to the races. Now I don't expect, there are people out there that you'll find that I saw a chart the other day. I don't know where people get this stuff, but somebody had a box drawn in like this on this over here, and like another box drawn in over here on this spike. I don't know what they were trying to get at with these boxes. But then somehow he came to the conclusion that because it was going to look like some kind of symmetrical, deal, and that price of Litecoin was going to go higher for some weird reason. I don't know why he thought that. Then the last spike over here, and that meant that Litecoin was going to go to $10,000 a coin. I don't subscribe to that at all. I think you're more likely to continue this trend of smaller boxes. So we had this box here, a little bit smaller breakout, and then really this breakout, this was a fake wick. You get the idea, right? So I would contend that you're probably just going to get something that looks about like that. That's my opinion. But it's still a big good breakout. If we did break out this stuff. Now it could continue to run as well. So this is why I'm playing it. And the other thing you look at, if I go back to Litecoin USD, and we go back to 2017, you'll notice the price of Bitcoin was obviously much lower over here when Litecoin made its all-time high of 420. We haven't even quite touched that prior all-time high, and Bitcoin is significantly higher. But really what happened was when Bitcoin started to make its big run here in November, if you remember November, so it was Litecoin had its huge breakout in, what was it? Yeah, early November. So I'm kind of basically looking at this going, okay, if this plays out similar to last time, but when Bitcoin started to make its big November rally into December, people went in search of, all right, Bitcoin's now several $1,000s. Back then it was several $1,000s. What else can I buy that's not as expensive per coin, right? It's just a psychological thing. You know, obviously market cap is what matters, but people were maybe looking at the market cap of Litecoin. I don't know. But then there was a buying frenzy on Litecoin because it was, you know, kind of considered the crypto silver to Bitcoin's gold is somewhat the narrative. I don't know that I subscribe to that, but nonetheless, I can see the same thing happening here again. Litecoin's only $191. Bitcoin is $62,000. Now there's a lot more possibilities and there's a lot more options of things to buy out there. But at the end of the day, too, Litecoin is in the same general category as Bitcoin, whereas like Ethereum really is not. Like Ethereum's a utility and platform token that, you know, smart contracts and everything else, right? Litecoin is a light and fast payment system that is supposed to be, you know, kind of complementary to Bitcoin. It's got a little bit more transaction volume, a little bit lower fees, so forth and so on. And so it's seen a lot of times as the little brother of Bitcoin, whereas Ethereum is really seen as, it should be seen as something totally different. So, you know, Elrond, Cardano, Ethereum, Avalanche, these are all platforms that you can build all kinds of applications on. And in theory, you can use the base platform of Bitcoin or Litecoin to build applications as well, but it's not directly suited for it. You need some sort of abstraction shim layer between there. But Litecoin is very much in the same camp. So when Bitcoin starts to run for all of the narratives around global currency, whatever narratives get it to start really moving, those narratives are going to translate well to Litecoin and people looking for an alternative. And you can buy Litecoin everywhere. So I'm kind of banking on that. I think Litecoin, once Bitcoin breaks out of this all-time high right here, and when it starts to get that media buzz, especially in November, you know, if we get up to $70-something thousand and we get a lot of media buzz around Bitcoin, people are going to go in search of something that's like Bitcoin that they can buy, right? And Litecoin is going to be one of the potential answers. Now, again, there's a lot more stuff out there, but I think in the whole, you know, if people are looking for a coin that they consider kind of a store of value / a currency, Litecoin makes sense to fit that narrative. So we'll see what happens. All right, let's go to comments. Quality ads 90% of the time. I got wrecked quite a bit, but a lot of positioning on the breakout. I don't know, position on the breakout, really a good idea. Well, you have to know what you're doing, right? So if you're going to take a trade on a breakout, it's risk management. So let's go find a breakout trade here. Right, so here's a breakout trade. You know, Litecoin. If you take this breakout right here, right, and you say, okay, I'm going to enter on a 4-hour close outside of this downtrend, which is a reasonable way to do it, then you got to set your stop loss right below that wick. So you'd be stopped out already for a very small loss. But you had the opportunity to take profit on this breakout. Then you have breakout, retest, resumption. So now we're getting that good retest here, right? So if we come down here, we've been watching for 190 retest, which, you know, this is probably when I get off the live stream here, you can probably guess I'm going to go, not financial advice, and this is not a certainty, but I'll probably lean into this confluence of support here and add to my trade. All right, so I already bought on this recovery of this right here. So when this bounced and then we retested right there is where I bought my last entry on Litecoin. So now we come back into this area. I might buy a retest of this confluence of this daily support, trend line support. But the good thing is I know exactly where to get out. But the same thing is true of a breakout. If you take a breakout, you have to know where you're wrong. So the only way people get wrecked taking breakouts is they just buy it and then sit there and twiddle their thumbs and hope it goes up. And when it doesn't just go straight up, then you get wrecked. Okay, that's not a strategy. That's hope. And hope is, you know, this that doesn't work in trading. So, you know, on a really low time frame here, this was not a bad breakout to take. You didn't really have much opportunity, but you know, you had the opportunity here to maybe move when you get back above this, move stop loss to break even. But probably not. You probably just ate a loss in this breakout here. But there's plenty of breakouts that do work. This one right here, So this breakout, if you're watching this same downtrend trend line, or if we move this, whatever this line is here, if I would have adjusted it for that, right? All right, there's a breakout. All right, so we broke out here. So you take this 4-hour candle right here, and you put your stop loss. In this case, yeah, I mean, you could have put your stop loss below that, wherever you want to put it. But, you know, this breakout gave you a nice move. You probably need a further down stop loss than that even. So this breakout stop loss should probably be below that wick right there. Just now looking at this 184, but I'm doing this on the fly. All right, breakout retest resumption even, and you moved from 180 to 191. You came back. Hopefully you didn't get stopped out. That's a stop loss hunt wick right there. Hopefully you were stop loss break even. But ultimately, if you manage this trade right, you had the ability to take a breakout from 181 all the way up to 215. And depending on how you manage your trade on this big green candle, you should probably go ahead and take some profits if you've been sitting there waiting for it. Take some profits, move your stop loss to break even at that point. If you had done this trade right, really, take this breakout over here, put your stop loss under here, and just let it run. Just let the trade do its thing. When you get this big move, you know, into, you know, you probably had a trend line here, resistance somewhere, or some sort of resistance over here. I don't know if there was. And I ended up, so I took this. I don't know. I'm just trying to break this trade down for you. This is like not, well, I need to do that so you can see it better. Sorry. Yeah, I did take this breakout, right? This is the trade I took. Okay, so I took this breakout and this structure right here. Entry there. I guess my stop loss was down over here somewhere. When we broke up here, you see this parabolic, you know, move on the 4-hour. When I saw that it was curling over, I took some profits. I took a small amount of profits up here as I saw it starting to curl over. You see these red, you know, candles start to get put in. When we put in this lower low right here and then bounced, I took some profits and I moved my stop loss to in profit. So I think my entries were here and here. Is that right? 185, I don't know, whatever. I think Tanner was in the trade with me. He can tell you where we entered. I don't even know. I just told him to buy some Litecoin. But what I did is I took profit here, and then I put my stop loss up here in profit. There was another level we were watching. It was 198. I put my stop loss in 198. So that was a breakout trade. There was some re-entry, you know, some breakout retest resumption I was waiting on there. But ultimately, this was a breakout trade. And yeah, it wasn't the biggest trade in the world, but it was a 5% win. It ended up being a 5% win. I took a little bit of profit here, and I moved my stop loss to basically like 4% in profit right under this level over here. And when we broke down over here is where I was out. Right? And then so I just got back in over here. And I'll probably add some right there. Okay? So you just have to know how to manage your trades. So if you get wrecked taking breakouts, it's probably because you're not managing the trade right. Sorry to tell you that. But the more likely signal is to wait for the retest of the breakout and then the resumption out of that, right? And that's a pretty good signal. Now, especially with position trades and longer term swing trades, you're going to give them more of a stop loss, give them more room to work as well. But like this whole trade, there's been 2 breakout potential trades here that we have. This is a breakout. This is a retest and a resumption, and this is a breakout and the retest and possibly a resumption here, right? So all those are trade opportunities. You just have to manage them right, and if you're not managing them right, you're going to get wrecked. Any trade, it doesn't matter what your entry criteria is. If you buy into solid support and you don't manage it properly, it's trade management. That's what it takes. So I hope that helped. But if you're getting wrecked taking breakout trades, then really maybe try to dial in your risk management. It's probably the next thing. BTC is dad, ETH is mom, and the other are kids of ETH. Litecoin is a fork of Bitcoin, right? I think loosely, yeah, it was originally a fork of Bitcoin, and then they just it's not really anymore. It was highly modified. My 4-year-old girl Violet thinks you are cool because of your opening music. Say hi to her, please. Hi, Violet. I'm glad you like the music. The glow sticks and strobe lights. Why Tor dot is pink color? Does that mean something? Oh, this one? Because I literally, it's because Polkadot's colors are pink, or look at that pinkish red color. Yeah, it's one of my core hodls. So my main core positions, I'll just share this with you guys here, right? So right now, Bitcoin's number 1, Elrond's number 2, Cardano's number 3. I think Dot's number 4, and then Matic, and then Link, and then Ethereum. Those are all BTC charts. These are the ones I hold. Those are the ones that I have HODL bags on. 1, 2, 3, 4, 5, 6, 7. So yeah, Bitcoin, Elrond. Yeah, so it's one of my core, I watch it pretty closely because it's one of my core positions. Right now it's really, really small because we're in Bitcoin season, so I don't have super large exposure to altcoins. But I do keep a good chunk of some of these on. Now Elrond's the one I've been building a position on. It got up to in the spike here versus Bitcoin almost 10% of my portfolio. Not quite 10%. I rotated a bunch of Cardano to Elrond when Elrond came into support over here, so I forget where it was. Elrond was at $130. Where was Elrond at $130 at? Yeah, it was late August. This is when I very first got into Elrond right here. $130, rotated a bunch of $3 Cardano into $130 Elrond. That put me at like a 6% position, and ever since then I've added they're basically adding roughly 1% on these dips. So like I added 1% on over here. I added 1% here, added 1% on a breakout somewhere. Right, I don't know where it was. I thought I had a breakout. Added 1% right here. And I added 1% somewhere over here on a bounce. Was it up here? I don't know. Might have been over here somewhere. There's actually these last 2 purchases were just with trade profits. So yeah. Anyway, point is that's the position I'm building right now to kind of answer the question. But Dot is pink because that's the color of the project. So I'm a bad person apparently. Jordan Barrett says. So, well, what did I do to you, Jordan? What's going on here? For browsing, I've been paid about. I don't know. Anyway, can we get this stream to 50 likes? I read your Twitter and got in BTC before the new all-time high. How are you feeling? I need to read your Twitter. I read your Twitter and got in BTC for the new all-time high. 47 watching. 47 likes. How am I feeling about Bitcoin? Like I always feel about Bitcoin. I'm macro, positive. I've got trades on coming in the $60,000 test. Here's my criteria. I'll share what I'm looking at for my trades here. I'm on a 12-hour time frame. I bought into the support, right? So twice. I bought some leverage into the support. I'm watching right now. I may add if it looks like if I feel good about this bounce here and coming into this confluence of support. I would really add a lot more on 58.8 test. That's what I've really been waiting for, honestly. But at this point, we would break this bottom trend line, and so I'm not too enamored by that. The other thing is we're kind of putting in a potential head and shoulders, right? So we got to watch that as well. We could have some short-term downside ahead of us if this head and shoulders were to play. So that looks like about like that. So that's the thing to watch. I think at this point, I'm in profit on my current trades. I'll probably let them run. I'm not going to be too, whatever the word is, active with them. What I'm really watching is to see if we stay above the 58.3, this bottom May weekly close on a daily closing basis. If we were to close a daily below 58.3, say, I might go ahead and close out my positions a little bit early. I think ultimately my stop loss is way down here below the September swing high of 52, right around the 50-day moving average. But that would be a fantastic dip buy. So actually my stop loss should be right under 57,350. And try to buy the dip over here. At this point, I'm more manually managing this trade because it's not of a significant position size that I can't manage it manually. But that's where I'm at right now, trying to rebuild this position before a potential breakout to the upside. But if we were to get this head and shoulders break, let's just measure that real fast. I mean, you get this potential head and shoulders working here. Say that's the neckline. I don't really know if that's a good neckline or not, but that might be a decent one. That gives us a 10%. So we already had a 10% sell-off, right? So we're 10% down. So we'd be headed for another 10%, which would put us in around... Yeah, that'd take us take us to the back to this trend line right here. So this trend line is, I think, if I go back, yeah, from the January peak through this price action here. If we were to break that head and shoulders, should probably exit a little bit early on the rollover over here. So I'm just analyzing this. I actually had planned to do this at some point today. You're watching me do it live. Like, where should I move my stop loss to is what I've been thinking. Should I just wait, leave it? But the thing is if we break down below this line right here, roughly wherever the head and shoulders is on a lower time frame, if we break down, let's just give it to that wick right there, and let's give it to, we're going to give it to that closing price right there. I guess we can move up to this closing price over here. We're gonna stick with the 4-hour closes. These 4-hour closes here and these 4-hour closes here are going to be my. It's kind of an ugly head and shoulders. But if we were to get a break of this, get back below this April weekly, we could bounce early at the monthly, which I would almost expect. This would be kind of maybe a bear trap. So what I would probably do, I would probably add again coming into this area, and I'd put my stop loss down here. And these entries and this entry, we get all stopped out if we got below this and didn't bounce immediately. And then what I'd be looking for, I haven't eaten a small stop loss, I'd be looking for this September swing high to come back and be retested, or this trend line, or this here. I wouldn't actually buy, the risk reward wouldn't be favorable buying into this trend line, because trend line support just isn't enough to convince me at this stage if we were to lose all this. I might add a little bit, especially if this 50-day inches its way up to the September swing high by the time this price action plays out. But in this range right here is where I'd be looking. And this is that breakout trend line down here below. So this whole range right here is where I'd be looking for dip buys, and then to close out those positions, those fresh positions below this trend line for sure, right? So maybe start slowly adding 52.9, and if we get a bounce, great. We'll just play the resumption out of there. But the really attractive to me, I've also been waiting for, I think it's going to happen probably in November. We're going to probably get a retest of the 50-day moving average, right? So this is what I've been waiting for. So if it happened now, it really wouldn't shock me. But I'm really looking for a retest of the 50-day to add a lot. So I'm hoping that we break out here to the upside. The 50-day gets drug up to $60-something thousand. We have a breakout. We have our breakout structure that starts to collapse on us. We exit our trades in profit, and then it rolls over and comes all the way back to the 50-day moving average. That's what I'm anticipating, but I'm anticipating that for about a month out from now, really, sometime in November. So my base case is that we continue to consolidate here. At this point, this is really a bull flag. I mean, it's really not. We're in an uptrend. This is more of a bull flag right now. So if we were to break out and get this price action to $70-something thousand, I'll draw my usual parabolic trend line. When price starts to roll over, I'll get out of our current trades and wait for this rollover to happen. I'm hoping that the 50-day gets pulled all the way up somewhere over here. We get a big 30% sell-off right into the 50-day, and then we start adding again. That's kind of what I think is going to play out. But always know that, mind your downside, and talking about risk management. This is how you keep yourself from, losing any substantial amount. Trading, the biggest secret to trading, the biggest secret to successful trading is you want, small losses and big wins. It's that simple. If you have 3 small losses and 1 big win, and the small losses are all, say, 1%, and your big win is 10%, guess what? You're winning big, right? But it didn't feel good. You've lost 3 or 4. So from a human emotional aspect, it's hard to overcome that. But you have to think incredibly this is a statistics game. Nobody knows what the market's going to do today. I mean, the United States could come out and Janet Yellen could say that I've convinced Congress to ban Bitcoin, and Bitcoin's going to tank, right? We have to, when it comes to active trading, there's always something unexpected that could happen that could cause price to do what you don't think it's going to do. So it's never a game of knowing what's going to happen. It's a game of playing the probabilities. The probability is, you look at this, we're in an uptrend. You can't deny that we're in an uptrend on Bitcoin. Nice solid bounce over here. We're consolidating as is normal after a big move. And the thing to do when you have a big move to the upside is to buy into support. That's what you want to do. You want to buy into support and then wait for the resumption out of there, and then maybe add some more on the resumption out. The resumption out is really the best time. The best time to the highest probability setup. But the highest risk reward is buying into support. So if you think you combine those 2 elements, right? If you're in an uptrend, like we are, and you wait for the price to curl over and you buy into support, like I did over here, that's the highest risk reward, because if I'm wrong, I know I'm wrong roughly right around here. I'm pretty sure I'm wrong, and I can start to position out of these entries at a really relatively small loss. When my upside, I'm looking for prices up here for my upside. If I put a trade idea on, and we're going to wrap up after this little segment here, but you get the idea, right? It's a series. You might lose. I mean, I probably actually either get stopped out or have to close trades entry early 60% of the time. I probably win 40% of my trades. But out of those 60%, maybe it's probably closer to 70% when I include break-evens or small wins that I don't consider wins, because I purposefully put stops at a very small win to basically offset any exchange fees, right? So I get a lot of small wins. So probably 70% of my trades are either pretty much break even because of exchange fees, or just straight up break even, or stop losses, right? And then 30% are winners, but they're much bigger winners. So out of the 70%, I had maybe 40% of those are small losses, just stop loss hits, and then 30% of them are me closing out trades early, or getting out slightly above break even. But the 30% that go on to win are 5 or 10%, right? So if I'm losing 1% or less 7 times out of 10, but I'm winning 10%, 5% or more 3 times out of 10, that's how you win. And so, but just to help you with the analysis, we definitely have a potential head and shoulders. Not something I typically watch, but the rest of the markets can be watching it. So I would say at this point, what I'm thinking is I have these 2 positions on down here. I really need to get my trade out in slight profit should we get over here. Because what I'll have some structure to play back to the upside. So I'll have this structure right here I'm looking at. So go ahead and exit here for a small win on those leverage trades. And this is my leverage trades, not my spot, right? So I'm really, really careful with leverage. I do not like losing money at an exponential rate because I'm on leverage, right? So looking at this, doing this analysis, talking this all through with you guys, if we get below this trend line and below this 61.5 support, I will trim. I will trim my positions, start to trim my positions, and to look to buy back here and here. Okay, so that would be a trim, look to buy back here and here. If it bounces early, say it bounces, right off of this again and blasts off, I've got this downtrend structure. If we break out of here, again, I'll add some back on the breakout. Hopefully we get a retest and then more on the resumption. You may not get a breakout retest resumption, so it'll just be a matter of, but at this point, if it rolls over that much, what'll probably happen, sans some kind of really bullish news that just sends it, it'll probably break out, retest, resume, or it could break it all the way to this prior all-time high, roll over a little bit, and then bounce, right? So somewhere in there, we'll get another re-entry. That's how I am probably going to play this. So I'll be looking for a breakdown here. And what I look for in a breakdown when it's not hitting my stop loss, the other thing I do is I wait for it to go ahead and break down and bounce back up into it. Because typically price does that. Sans, some really bearish news, of course, that just sends it downward, and that's where my mechanical stop loss would have to save me. Sans, without that happening, normally it bounces up to resistance and then curls over. So somewhere over here, when I detect that this is curling over, I'll go ahead and exit, for a small win. Or I'll put a stop loss. As we bounce back up into that, I'll go ahead and say, okay, it's either bounce or die. It either bounces and goes, or I'm going to get stopped out for a small profit. Which basically means I paid for my exchange fees, right? And I paid for the margin, the leverage, the cost of borrowing that money for the time I had it. So that's probably what I'll do. I don't want to turn this. This is a winning trade currently. I don't want to turn it into a losing trade. So I will probably trim if we get below here with a look to add back at 58.8 or 58.3. We have this structure right here to play on the break to the upside now. So that's the new line of repair. We had a line of repair here. So what I started feeling good when we broke our line of repair there, but we'll see what happens. We have this new top trend line here to play. If we do get stopped out here, we break to the upside, it'll be a small delta of where I got out, kept myself safe on leverage, and then re-enter on leverage on the other side. How much leverage do I use? So the biggest I ever go, if I'm really convicted, we've had a really strong uptrend, and I had the ability to properly build my position, I'll be at 2-to-1 leverage. This means I have twice as much. So I have, I say I have 1 Bitcoin. So I borrow another Bitcoin. So I have 2 Bitcoins on the long side of the trade. That's exceedingly rare when I have a 2-to-1 trade on, because it takes me a long time to build up that position. I build them typically in 10 to 20% chunks. So like right now, these 2 entries, I'm like 1.2 to 1 right now. So 1.2 to 1. So again, say I had 10 Bitcoin, just keep this simple. Right now, I would be borrowing 2 Bitcoin. If I had 10, I'm currently borrowing 2. I'm borrowing enough funds to buy 2 more. So this would have been 1 Bitcoin and 1 Bitcoin add. So I have my 10 core Bitcoin and 2 more that I'm currently positioned in right now, looking for a third. I might buy that third right here, and then exit all of those, more or less break even here. If we were to get below, break down, come back up into it, I'll be out, right? And then a break to the upside of this structure might be a couple more. I might finally get myself to 1.5. Ultimately, I feel more comfortable when I'm about 1.5 to 1, which means if I have 10 Bitcoin, I'm long ultimately 15 Bitcoin because I've borrowed 5, and then I sell pretty aggressively on when I start to see the price start to roll over with leverage. And leverage is pretty active trading for me, right? So I'm trying to play the impulses. Let me show you my Bitcoin chart. I'll show you what I do with it. My trading chart, my trading history. Here's my trading history. My Bitcoin trading history. You see my spot buys and sells. But what you see I'm trying to capture with leverage is I'm not trying to buy like the bottom or anything like that. All I'm trying to do is capture the move. This is my best trade of the year probably. This one, we got the breakout of this downtrend structure in January, and this bounce somewhere over here on that breakout, which some claim is a bad trade, I guess. On the breakout of this structure right here, you can see where I put that arrow. You can see right where that was. On the breakout of this structure here, I guess it was probably somewhere over here. Apparently I got in at 33.54, it looks like where I had it. Somewhere over here I took a trade, a leverage trade. This was close to 1.5 to 1. I don't think it was 1.5 to 1. I think I might, I don't know, didn't matter. And then that was my best trade. But I'm trying to trade the sweet spot of these moves. You see here the breakout of the structure, the upside, breakdown, another leverage trade. This was a lost leverage trade. I lost leverage, won some leverage there. And then I did hit a pretty bad stop loss over here. You see it's actually now up to 8. I need to update this. I'm up to 8 stop losses, total stop losses that I've hit. So again, so I've had 1, 2, 3, 4, 5 good solid winning trades, and I've had 8 stop loss hits or break evens, something like that, right? So that's 5 solidly winning trades, maybe 6, and then this was this was a manual exit, I think, over here. I don't really know why I have that on there. That's more or less just a stop loss. I could probably just take these 2 off of here because they don't really matter. But yeah, so what's that? 1, 2, 3, 4, 5. Yeah, so 5 leverage wins, and now I'm back in leverage over here. And 8 losses. And the 8 losses are all much smaller than the wins. That's how trading works. But that's all I'm trying to do is just I'm trying to play the sweet spot of these big moves. And so the other thing too is we've been very sideways for a while. So this stop loss hit started racking up over here with all this crazy price action. So I hit a stop loss here, over here, and another one over here. And then I think another one probably, a couple on this as this rolling top started to happen. So that was my first couple of stop loss hits. Maybe 1 down here, definitely 2 more over here, 3 over here probably, and then 1 or 2 over here now. But when because I'm so aggressive about getting position, when we get this big move, guess what? I'll be in leverage and I'll have another huge win. So right now it's 5 wins, 8 losses, and counting, right? So we'll see if this one ends up being a 9th loss, or I'll count it as a loss right now. If I get, like I told y'all guys, I went through that whole thing. I'll get out pretty much at slight profit, but again, I've paid for, interest for holding, for borrowing the money that I needed to enter that leverage trade, and I've got exchange fees against, working against you. So if I do exit over here, and especially if I'm going to take a 3rd position, I'll probably end up taking a 3rd position. And if it breaks down, then it's a super small loss on that. So it's 2 small wins and 1 small loss with trading fees and borrowing fees. It's going to be another break-even trade, right? So did that answer your question? Need some 50. Sell at 51 your spot, bull run. So here's what I do with spot. Right? Spot's very simple for me. This line right here. I get above this, I'm in spot. Like over here, I added to spot pretty aggressively down here when the 120 broke. This is where I bought my initial spot positions. Draw this. I think it was a trend line through here. Yep. All right. So I bought my initial spot position on a when we closed above the 120 in here, and then on a retest resumption somewhere in here. Right. I don't know exactly where. I'd maybe lying if I try to tell you exactly where. And then right here, when we bounced off of this 120 and then got above this downtrend, that was my second. This is my hodl bag. All this stuff over here, this is what's sitting offline, chilling, or collecting interest on Celsius. A combination of in cold wallet and Celsius is what I have. Still, these purchases are still just chilling. This is what I've been trading with this whole time. All those trades that you see, spot trades in and out, and leverage trades is out off of this position right here. But basically, if we're above the 120, I get in above the 120, and I didn't get out of spot, this tradable spot right here. I sold it when we lost the 120. And then now we were really pretty far below the 120. We had some really good market structure. When we get too far below the 120 is where I'll take a stab at adding spot. That's exactly what I did. We broke that downtrend structure right there. I went 100% all back in spot. Initially, I was just going to play this as a dead cat bounce. So I was waiting to see what happened here. And I was really close to selling, but I didn't sell my spot because I wanted to give it further, closer back to my initial price. So I didn't sell my spot. What I ended up doing is this set up a really good opportunity, and I ended up taking leverage out of this consolidation, bounced to the upside. As we broke the 120, I ended up taking leverage, which is not typical for me, but you get the idea. But it's that simple. If we get back below the 120, this is the last place. Tanner's on here, you can tell you. I've given him 2 trade signals. I said put in a spot order at $40,000 on Bitcoin. That's where he bought Bitcoin his last buy. He also bought over here with us. All right, so Tanner is on here right now. He's a baller. He's probably the best trader of all of us because all he's done is hold Ethereum and Bitcoin from way over here. He just bought Bitcoin right there, and then I had him buy Litecoin on that initial breakout in the 180s. So there you go. All right, guys, I'm gonna wrap up. Obi-Wan, do you heard of staking protocol with huge APY, Olympus, DAO? Yeah, the yield farming game. There's some big gains to be had in yield farming. I have heard of them. I've only done a limited amount of yield farming myself because I just don't have time to manage, and keep track of who has what, best yield on yield farming. So my yield farming game is pretty weak because I'm too busy trying to figure out what the heck Bitcoin and the rest of the crypto market's doing. So let's see here. Yeah. So anyway, that's where we're at. Let's see. I'm gonna wrap up though. I'm losing it. Starting to lose it. We've been going longer than I thought. Nice. That back 100% spot. That 32K. Yeah, that was a good trade. Sorry I was on mute for a second. If you mistook what I meant, Tanner is right. It was a super compliment. Okay. Thanks, Jordan. Bitcoin loves to make head and shoulder patterns and break up. Yeah, Chris. Yes, exactly. You have to wait for it to break. You can't watch for it and anticipate it. You have to. That's another good lesson. The lesson for another day at this point. I need to wrap up, but head and shoulders. If you see them developing, there's a million head and shoulders on these patterns on this chart. Look, okay. There's one there. People were probably looking for head and shoulders, looking, oh, it's going to tank upwards. Another head and shoulders here, and then boom. That happens, especially on Bitcoin, but on NASDAQ, especially tech-related stuff. You see these like pseudo-looking head and shoulders all the time, and it just breaks upward. And it doesn't mean just consolidation. You have to wait for the head and shoulders to clearly break down, retest the neckline, and resume down. Then yeah, that's actionable signal. But until then, and this is just. I'm just looking at what other people are going to be looking for, and if this were to break down at this point over here, we should probably, be prepared ahead of time. All right, thanks everybody. We're going to wrap up here. Appreciate it. Y'all have a good one. Let's turn back on the Doge-wave.